Good morning, everybody. Just for the records, my name is Stella Ojekwe Onyejeli. I was just saying to my colleague that since I changed my name to a double barrel surname, I would have made a lot of money trying to get people to pronounce my last name. At the NSIA, the Nigeria Sovereign Investment Authority, we have a mandate to invest locally and internationally for profit. 40% of our committed funds is directed towards domestic infrastructure investments through our Nigeria Infrastructure Fund. 60% is for global or international investments. Of this 60%, around 10% is allocated to emerging and frontier markets equity. When we started trying to implement and roll out investments across the funds, we looked at direct investment opportunities in Africa. We were really keen to start with this. What we found when we had done some research and spoken to a lot of people and tried to get into African markets was that we didn't have enough sort of information. We felt we didn't have a deep understanding of the dynamics of markets across Africa. We felt we didn't have enough to be able to effectively risk manage these investments through their life when we made them. So we decided, what else can we do? How else can we go about it? We thought we would look for fund managers who are specialized in investing in Africa. Unfortunately, we didn't find enough funds that were specially focused on Africa investments, Pan-Africa investments, that met our investment criteria. In the end, we went with emerging market-wide fund managers. On the other hand, over the last year or so, we have become the focal point for foreign investors, both private and government-funded agencies, but especially government-funded agencies who want to invest in Nigeria. They have different models. What we're hearing a lot are government-funded agencies that want to invest without necessarily having boots on the ground. They are keen to leverage deal identification and due diligence capabilities to invest in Nigeria. And I think this started us thinking, if we really wanted to do direct investments in Africa, as we do want to do, then perhaps this is one model that we can use to go forward. And I mean, it's a model that is already working. Since 2011, sovereign wealth funds internationally have been collaborating to invest in each other's countries to do cross-border investments. I'll touch on a couple of examples. The Russia Direct Investment Fund, RDIF, they are a really good case in point. They have been able to successfully partner with sovereign wealth funds across the Middle East and Asia. Examples are the Kuwaiti Investment Authority, Mubadala, China Investment Corporation, Korea Investment Corporation, and in India, the State Bank of India, to invest directly in Russia, and also in some cases, in the case of Korea and India, cross-border investments, so both investments in Russia and India. They've done this quite successfully, and the size of the funds are significant. We're talking about each party investing a minimum of $500 million. Imagine the impact of that in Russia. I guess one thing to say is the current situation, the Russian-Ukrainian situation, I don't know what the impact of that will be on these relationships now and going forward. That remains to be seen. But the model that they have put out there to get the co-investment opportunities is one to perhaps emulate. There are other alliances. There's the Innovation Alliance, a group of sovereign wealth funds, unlikely partners, ADIA from the UAE, Alberta Investment Management Corporation in Canada, and New Zealand Superannuation Fund. They've come together to form an alliance that enables them create a platform that allows them to secure both global and local opportunities for investment. They exchange best practices and knowledge, and they can cooperate in investing in areas of joint interest. One of their recent investments in Bloom Energy, which is a fuel cell developer, that investment was done only by Alberta and New Zealand. So it's a loose alliance, but it's helping. And they have co-invested. So this is a model that is out there. It's working. We should emulate it. I would like to say, Africa is not left out. There have been some mega deals in Africa in the last couple of years. Some examples, in September, the Investment Corporation of Dubai invested 300 million in Dangote Cement PLC, a Nigerian company. Prior to that, in 2013, the PIC of South Africa had invested about 289 million in Dangote as well. Recently, the Qatar National Bank bought a very significant stake in EcoBank Transnational Incorporated, ETI. It's a Pan-African bank. That stake, which is almost about 300 million, made them the single largest shareholder. Second to PIC, again from South Africa, that was the single largest shareholder. PIC had invested 250 million. Prior to that, Qatar National Bank had bought the Société Générale's Egyptian business for $2 billion. This was in 2013. So deals are happening. The question is, how can we get more of this going in our African markets? How can we open this up? How can we collaborate as Africa sovereign wealth funds and pension funds? In Africa, sovereign wealth funds are growing. Pension funds continue to grow given the young generation in Africa. How can we channel these funds to be the catalytic agent that's required to open up capital markets and, intra-Africa investments? Hubert gave us one interesting statistic that currently there's only 5% of investments that is intra-Africa. So Africans collaborating to invest in Africa is only 5% of deals that are being done. We want to open this up. With me this morning to discuss this very interesting question is a very distinguished panel, which I would like to introduce now. On my immediate left, Alexander Owino, Joint Secretary, Parastatal Reforms Implementation Committee in Kenya.
Thank you.
Richard Mwinga, Chairman, Zambia Association of Pension Funds.
Good morning.
Lesedi Mwakofi, CEO, Botswana Public Officers Pension Fund.
Good morning.
Mr. Kanyi Gachoka, Chairman, Retirement Benefits Authority, Kenya.
Good morning.
And Amadou Hott, Sovereign Wealth Fund for Strategic Investments, Senegal. This is
Morning.
A very young sovereign wealth fund, 1 year old. I can say that now. We're 2 years old.
Morning.
So let me start with you, Alexander. Can you tell us, Kenya is in the process of forming its sovereign wealth fund systems to promote cross-border investments in Africa. Please share some co-investment opportunities for global and African investors in Kenya.
Okay, thank you very much, Madam Chair. Kenya has a lot of investment potentials for both regional and global investors. First and foremost, we have LAPSET, which is a regional infrastructure project covering road, rail, power, ports, energy. This is a $13 billion project that we think is the biggest in Africa at the moment. We also plan to have a silicon savannah in Kenya. We call it Konza City. This is a $3 billion development, and we're about to break ground on that. As you know, most of the US ICT firms are headquartered in Nairobi. IBM Africa is in Nairobi. Google Africa is in Nairobi. GE Africa is in Nairobi. So we have a lot already on the ground. And we lead the world in mobile banking. We do have 5,000 megawatts planned for energy. And this includes geothermal, where we are one of the largest developers in the emerging world. This also includes coal-fired plants, $1 billion currently going through tenders, as well as other renewables. Kenya has announced a rail development from Mombasa towards Nairobi initially, and then regionally to Uganda and Kigali. This is a $3 billion development. It's already broken ground, and feasibility studies to extend it from Nairobi to the rest of the region is ongoing. We plan a greenfield airport that will be literally 10 to 20 million passengers annually. So again, this is something that you investors can actually come over and help us develop. We have one of the best developed financial sectors in the region, and Kenya is planning to develop Nairobi as a financial hub. This is a project that is on the table today. I'm very privileged to have done the concept note for that. It's going to be modeled on financial centers like Dubai, DIFC, and the Qatar Financial Center. So again, this is open, available today, and we can literally start as soon as you're ready. Kenya also plans a lot of developments in oil and gas. We recently discovered substantial onshore as well as offshore oil and gas. This will include possibly a pipeline today, either in Uganda, shared by the three countries, that's Uganda, Rwanda, and Kenya, and or a pipeline in Mombasa to the region, as well as a major refinery. Refinery, we think about $3 billion, can be set up both in Nairobi, in Kenya, or in Uganda. We also have special economic zones which are available in Mombasa. Again, we expect this to have a regional slant. So if you have one assembly plant in Nairobi, you don't need to replicate it across the region. You can actually have it in Kenya or in Uganda or Tanzania. And finally, Kenya has a PPP law and framework in place, as well as a PPP unit. This is funded by the World Bank that can help a lot in the project development. It's probably good, Chair, to end on a bright note that with the substantial onshore as well as offshore oil and gas reserves, Kenya, together with Tanzania and Mozambique, could actually make East Africa the 21st century capital of oil and gas. So I think with that, there are a lot of exciting things that you can come and build. Thank you very much, Chair.
Thank you. Richard, may I ask you to please give your views on what would achieve stronger investment partnerships across the Africa pension funds, and what would also enable African pension funds to invest in capital markets?
Thank you very much, Chair. The first thing that I have to say is, I come from a pension fund, and at the same time, I'm also chairperson for many pension funds in Zambia. And one thing that I've seen is there are huge investment opportunities that are available in infrastructure in Africa, and particularly speaking for Zambia. There's so much that has to be done in terms of road infrastructure, shopping malls, talk of the railway systems, you talk of many other things that actually that have to be done. And you find that most of the budget and most of the projects that the government has prioritized to do with the infrastructure. And pension funds are being asked to get involved in how to help do those infrastructure projects that the government has. Now, for pension funds, of course, there are some reasons why they have to get these are long-term investments, and at the same time, there are risks. And not only that, but they can also help pension funds to match their fund liabilities and help these institutions not only to do that, but also to diversify their portfolio. And they're coming in. But one thing that has come to the fore is the issue that the policy that regards how pension funds can participate using public-private partnerships is complex. And you find that the policy guidelines themselves, they are not coherent to those that the pension institutions would want. And also the instruments that have to be used on the capital markets, also those instruments, they are in a way that actually the laws are all different. So you find three pieces of laws that are different. The one that is guiding the public-private partnerships, and then the one that is guiding the capital markets, and also the pension themselves, they have laws that guide themselves. And so there is need to have this harmonized so that the institutional investors, such as the pension schemes, can have an appetite in getting into these private partnerships. It's something that is very, very important, and I think what is being done is to create environment, a policy environment, whereby the guidelines will also help the institutional investors, such as pension funds, to get involved in these private partnerships. But at the same time also, there is need to create that transparency. It's a complex thing, and it requires skills, and the skills that are required are very, very important for people to understand exactly what they have to do in that public-private partnership. And at the same time also, there has to be some reform in the regulatory framework itself. In pension schemes, of course, in Zambia, we have already gone ahead in pension schemes that we have done the reforms, and there are broader pension reforms that are taking place. But one of the reforms is that in Zambia, at the moment, you are able to invest 30% outside the borders of Zambia. And of course, this can be invested within Africa and beyond Africa. But effectively, what has been invested is less than 5% because of lack of skills and issues to fully understand what needs to happen. So there is that reform that is taking place.
So,
and at the
Richard, let me just try to get what you're saying. For stronger investment partnerships amongst Africa pension funds, you're saying regulatory reforms need to be put in place to make the investment process much more transparent and make it more easier for various institutional players from across Africa to invest.
Yes, it is in fact paramount that these regulations are done in the capital market themselves to develop, and I think the previous session they have talked a lot to do with the capital markets,
yes.
And I think those views are very, very important in ensuring that the reforms are taken that way. And I think across Africa, in terms of also the pension, there's a lot of reform that is underway, and that reform, of course, has to align to ensure that they don't only look inside, but they also look beyond where they're going to get the returns. That's extremely important. Yeah.
Thank you.
Yeah.
Thank you very much. Lesedi, your fund is recognized as one of the pioneers promoting pension fund investments across Africa, allocating 14%, which is one of the highest on the continent for investments across Africa. Tell us about your strategy and recommendations on how other pension funds can work together to invest in Africa's capital markets.
Thank you, Lady Chair. For the first time, I've been chaired by men. At least I'm able to share this stage with a woman. The fund is basically 48 billion in terms of assets. Last year when I came here, I did announce that we are working on a new IPS. I'm happy to announce that the new IPS has been launched into the market. It is actually bringing out new products and very exciting products into the mix, both in Botswana and globally. If you look at the new the asset allocation, we used to have 30% locally in Botswana and 70% offshore. We have revised the asset allocation and actually now bring 10% back into the African continent. Now, coming back to the question, STB POPF, we invest way more than 14% in the African region. I think it's important that we talk about our product portfolio so that we can understand where it is that the mix that actually comes from. The first portfolio that we have is the wealth accumulation portfolio, which we name the active and deferred pensioner portfolio. The second being the capital preservation portfolio is a new portfolio which we launched this year called the pre-retirement switch portfolio. This is actually geared towards members that are retiring, nearing the retirement age. And then we have the third one being the capital drawdown portfolio. This is the one that is geared to members who have got a higher risk appetite, called with profit pensioner portfolio. And lastly, the capital drawdown portfolio for members that have got a less appetite, called the non-profit portfolio. I think coming back to the question, in aggregate, for all the four portfolios that I've just outlined, 41% is invested in Botswana, with a further 15 to 16% allocated to outside Botswana, but within the African continent. I'll speak more to the results of the investment policy statement because it's something that is worth sharing insofar as the new strategy is concerned. On the unlisted equity space, the unlisted space has so much untapped opportunities, and it is on that backdrop that we have decided to have a Botswana private equity mandate. Our intention here is to have 2 private equity managers running the country's specific private equity fund. You'll believe with me that even though the funds are anchor sponsored by the BPOPF, we have an agreement with the general partners to have the funds open to other investors from outside, including even outside Africa. And I invite fellow African pension funds to participate in the Botswana growth story. I want to tap into the infrastructure because it's something that we have not been doing in Botswana. We have a specific infrastructure fund solely for Botswana. The infrastructure investment gap is quite huge, and investors can actually get private equity kind of returns on infrastructure development projects, and that excites us as Botswana because this is a new venture that we haven't been tapped into. We believe that the collaboration with other African countries is an opportunity because, one, these infrastructure projects create employment for Botswana, or even if it's within the African continent, it creates employment for the responsible citizens in those countries, and actually creates value in the way in which we do things. And there's also visibility, because if you talk about infrastructure, energy, buildings out there, it's things that the pension funds can relate to. And we believe that having a structure such as this one, as pension funds, we can significantly contribute towards the GDP in our respective areas. I would like to lastly talk about, yes, another new product that we have, the bond market, and that given our limited investable opportunities in terms of the bond issuance in Botswana, we have tapped into the inflation-linked South African bonds. It's an exciting product. We believe that some of our neighboring countries, especially in Africa, should exercise such proxy investing where conditions are similar. So no matter what the asset class is, I was just talking about the new products that we have introduced as per the new investment policy statement. There are other products that you could look at in our website, but these are the ones that are really quite exciting because the tenders are out for institutional investors to come and partner with us. It's an open tender where you just go into our website, www.bpopf.co.bw. We are excited to get more partners into this space to assist us because even some of the African countries and even globally, insofar as the infrastructure projects, we believe that we can do more. I would like to thank you.
Thank you. Kanye, tell us about the Retirement Benefits Authority Kenya investment strategy, with a particular focus on your strategy and interest investing in capital markets and infrastructure, both within and outside Kenya. What are your views and recommendations on how to stimulate more co-investing between Africa Pension and Sovereign Wealth Funds?
Thank you, Madam Chair. First, I think I would like to just enlighten you. The RBA, that's the Retirement Benefits Authority, our main role is to license and supervise private pension schemes in Kenya, which includes the National Social Security Fund. We have, over the years, seen a growth in the industry. We are currently at about $7.7 billion US dollars, and the schemes are growing. But we have several challenges, which is the low uptake. But our role as RBA is to not only advise government on pension policies, but also to try and increase coverage and to try and see how we can assist in increasing the ratio, savings ratio, which is quite low. On the investments front, we have seen an increased uptake and investments in capital markets and infrastructure. Previously, most of the pension schemes were investing in land and bank securities, but now there's a big uptake in the capital markets, which we think the pensions industry has, I think, about 20% of market capitalization in Kenya. Part of the role we have is to encourage and to educate the schemes on various investment opportunities, both within the country and outside. And one of the ratios, we set ratios, investment ratios for the pension schemes. And currently they are allowed to invest up to 15% in offshore or in African markets. But because of the low problems of knowledge, I think they only invest about 5%, so we have a challenge there to try and encourage them to invest in other African markets. In the year 2009, we held an investment conference in conjunction with the International Monetary Fund, the Capital Markets Authority, and the Insurance Regulatory Authority in Kenya, to enlighten the schemes on other investment opportunities, not only in the country, but also outside, and especially in the African market. There's been an increased interest in Africa, and there's also a lot of infrastructural projects that are coming up. And we have tried to encourage them to invest in the infrastructural projects, especially government infrastructural projects. And we have seen a more uptake of government bonds by the private pension scheme.
So, Kanye, is this interest you're seeing from local players within Kenya, or are you talking about across Africa? I mean, what do you think we can do to stimulate interest from other African countries into our markets?
I think one of the things we need to do is have more collaboration and conjunction with other schemes in Africa, so that we are able to enlighten them on all the investment opportunities that we have, both in Kenya and across the African continent.
Mm-hmm. Yes. Thank you. Thank you. Amadou, you're from the Senegal Sovereign Wealth Fund, which is just a year old. Yeah. I'll keep emphasizing that because we're older than you in Nigeria. Sure. Tell us what you feel the role you think sovereign wealth funds can play in developing capital markets in Africa.
Okay. Thank you very much, Stella. Good morning, everybody. We started the Senegal Sovereign Wealth Fund last year. It took us 6 months to prepare the concept, the bill, pass the bill, enact it as law, and then start the company, recruit the management team. I was appointed CEO in October last year. We've hired 4 senior investment professionals and 4 junior investment professionals. Our fund is not a fund that is based on, let's say, excess revenue from the government, let's say, benefiting from crude oil accounts or things like that. Our fund is based basically on government assets and some cash from the government, from the budget every year. So every year, government gives cash, but government transfers state-owned assets to the fund, but land, concessions, royalties, but also shares in production of mining companies. In Senegal, often when a mining company comes, we try to take an option to acquire 10% of the production of the mining company at cost plus a margin. So government cannot manage that really, because you exercise the option if the market price of the minerals is higher than basically the strike that you're using. So the government is transferring that right to us so we can exercise the option and make money if the price of minerals goes up. That enables us to use the money to invest in new companies, but also invest in state-owned assets that require capital. So this is the first thing we do. And we're trying also to improve the state-owned assets, because so far, the government hasn't done well in managing some of its assets. And the idea for us is basically when we build those companies, restructure them, or invest in new projects, is to exit on the stock market, to deepen the stock market at a later stage. Because in West Africa, we have the BRVM, which is in Ivory Coast. Senegal has only one company listed there, which is Sonatel. It's a $4 billion company. It's the biggest company on the stock market, actually, with 1/3 of the volume. And we are trying to list more companies in which the sovereign wealth fund has been a shareholder. Instead of selling it to another private equity or selling it to a pension fund, we rather list it on the stock market, so to improve liquidity, to increase the number of companies listed, but also to make sure the Senegalese participate on the growth story of this company. So what we do also is we co-develop projects from scratch with some entrepreneurs, Senegalese entrepreneurs or foreign entrepreneurs. One example, a US investor had been trying to develop a solar project, 20 megawatt. It took them basically 2 years. They signed the PPA and all of that, but they were struggling to raise debt and additional equity. So we came in, we took over the project by committing to put equity alongside the investor, raise new equity. So we're in the process of raising new equity for that roughly $40 million project, and then raise the debt. So the debt, we've spoken to OPIC in the US, we've spoken to the African Development Bank and others. So once we clear with the equity, actually, then we are sure we will get the debt, because the debt is available if the project is well structured. The PPA is 25 years, guaranteed by the government of Senegal. We have a sovereign guarantee to back the payment of the national electricity company. One of the other things we're working on also are in the agri sector.
Sorry, Amadou, can I just interrupt?
Yeah.
I think we're running out of time, so you can just wrap up in the next 30 seconds.
Just one thing quickly on infrastructure. We are trying to do, we think will help foreign investors invest in infrastructure, but also deepen capital market, is to create operating companies to operate toll roads that were financed by the government. And with a partner, create the operating entity and then list our stake later on the stock market. We are doing it on the airport project, the new airport in Senegal. It's a 600 million euro project. We finalized negotiating with an international foreign operator. We'll own 49%, they'll own 51%. But after 3-4 years, we want to list our 49% or part of our 49% to give the Senegalese and other investors the opportunity to invest in infrastructure. We are doing it also on toll road, $800 million financed by China, government of Senegal putting 15% equity, China financing the rest, but the fund creates the operating entity to operate the toll road with a partner or without a partner, but then list the company and make sure it is a national champion of toll road operation in the country and operate all the toll roads in the country. Thank you so much. Okay.
Thanks very much to the panel. Ladies and gentlemen, you've heard that there are exciting opportunities across Africa. And from experiences around the world, it is possible to co-invest for African pension funds and sovereign wealth funds to co-invest. It is possible for African sovereign wealth funds and pension funds to be the agents through which we can get foreign direct investments into the country. Let me now throw the floor open for a couple of questions. Because we're so short on time, we'll be able to take 2 questions. That gentleman over there. Yes. Yes. Oh, microphone. Microphone, please.
So I would like to ask how much investment are the pension funds here prepared to make in infrastructure funds, for example, for a regional infrastructure fund, not local national fund like in Botswana, but for example for East Africa. There is a community out there. There are also West African possibilities. So are you restricted from investing in a dollar-based fund of that sort? And if not, I would like to talk to you.
Okay.
Please state your affiliation.
Sorry? Mahesh Kotecha, Structured Credit International. I'm also on the advisory board of East African Development Bank.
Thank you. So that question should go to Richard, Zambia Association of Pension Funds, and Lesedi Botswana, and Kain, RBA. How much are pension funds prepared to invest across the region in infrastructure projects?
Funds, private equity funds.
Infrastructure funds.
Yeah.
In infrastructure funds, not direct projects. Do you have allocations for these and, you know?
For Zambia, you know, the investment guidelines are very clear that you can invest 30% outside the borders of Zambia, but it does not specify in what instruments you can do it. So it's something that we have not yet done. I know it has been because of capacity and issues to do with due diligence and partnerships, but it's something that is on the table being discussed. And already, I think we have advertised in quite a number of institutions to get partnerships with other partners, custodians, so that we can manage to do that outside Zambia and also outside Africa.
Lesedi?
Yes. For Botswana, because we are a very small country in terms of population, only 2 million, we have allocated 2.5% to Botswana. And like I talked about the revised asset allocation from 10% from global back to Africa, we are allocating 7.5% for infrastructure in Africa. Thank you.
Kain?
For Kenya, as RBA, we are in the process of establishing new guidelines, investment guidelines, and one of the emphasis we want to place is on government securities and sovereign funds because of their long-term nature. Infrastructural funds, because of the interest now in the East African region, in energy and roads. So we are advising government on increasing the investment portfolios for these funds.
Thank you. One more question.
Yes, I had a question about sovereign bonds. What have you done with sovereign bonds to finance your different infrastructure projects, and what are you doing to increase your credit rating? Because that's one of the critical hurdles in terms of, you know, infrastructure financing. If every country could state something about that, I'd appreciate it.
Please state your affiliation.
Hugh Bobbitt, I'm the chairman of Georgetown Equity Advisors.
Who wants to?
Yeah. Thank you very much for your question. As you know, Kenya recently went to the capital markets and raised a $2 billion sovereign bond. Now, the application of that was initially to retire an earlier borrowing from the capital markets, and the rest was to be allocated to infrastructure, $2 billion.
Any other country? Sovereign bonds for infrastructure investments? No. Well, I think given that we're out of time, we should stop here. Let me ask you to please give a round of applause to this distinguished panel.
Doing business in Africa. You can't afford to be without Africa Investor.